Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Hopefully your trading's been going well. I think for most of us, obviously, it's been going pretty well. In fact, I'm just going to pull up my trades here, see how we're doing. I know we've had some significant improvement just from the time that we've just from this morning. So it's kind of fun to see that kind of take off. So, but yeah, I just want to welcome everybody here. If you are new to the program, let us know in the chat box. Just give us a little, just tell us what state you're from or what country you're from so we can welcome you here. We're excited that you would join us. If you are watching this on YouTube or in the recording, feel free to ask questions in the comment section down below so that we can answer those questions for you. If you're here live, as always, feel free to ask those questions in the chat box function. So, all right, guys. Well, I'm excited to be here. Really excited. This is probably my favorite class of the week, just because it is my longest running strategy, the COT Report. And it's obviously one of the big reasons why we're very profitable this week. So I'm excited to discuss it. So kind of the outline for today is I'd like to first spend a little bit just first of all updating where our signals or where our trades are at for the week, what profits we have in the journal. Then I'd like to kind of go over the basics and just kind of go over how the strategy works in a nutshell. I'm not going to spend a ton of time on that because we've got other webinars that go over how it works in more detail. And I have a special guest today. We're going to have Ben share some his findings. He did a longer back test through last year, actually, which I think will be really interesting to see. He's got some observations and I have some questions to ask him, and he's got some things to share. So I think that'll be awesome. And we want to give him some more time to share what he's found. So, and some time to ask him some questions. So that'll be a little different. We haven't really had anybody else share in our webinar. So this will be kind of fun. But without further ado, let's go ahead and get started with our disclaimer. As always, I need to remind you about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So first of all, let's update our journal. So let's go to the COT Report journal. As of this morning, we were up 575 pips. Also, just a little GWiz factor. I actually stopped out on my MT4 account of one of these trades. Let me see which one it was. I stopped out on my FX trade, which is where I'm tracking my signals. All 6 are still open, but I did stop out of which one? I'm pulling it up here. I stopped out. Let's see if I have CAD franc again. Euro CAD, Euro yen, NZD yen. So NZD CAD. Yeah, NZD CAD I closed out. When I say I stopped out, I hit my trailing stop on that trade. Let's see, orders, activity. Oh, I just want to see. Oh, that's just activity of units. Let's see, does this show me? Huh, this is not showing me that. Okay. Anyway, I need to check to see what it actually made or lost, but that one did close. I just want to make sure everybody's clear because I'm sure for those of you trading on MT4 that happened. And the reason why is because this trailing stop's a little tighter, right, than it is on just the normal trailing stop that I use on my FX trade. So that might be the reason why you might see that. So anyway, but nonetheless, I do want to update these current trades that I have open here. Come on, let's just close that and do that again. Okay, so let's do this quickly so we can move on. So the CAD franc is my first trade. I have 12 pips on that right now. Franc yen, I'm up 163 pips right now, 163. And Euro yen. Wow, that one really took off. We were up 157 pips this morning. That one's now up 241 pips. Wow. Euro CAD, I've got 105 on that one. NZD JPY, I've got 159. So that one's improved as well. And then NZD CAD, I'm currently up 78. So that one's the only one that did not improve. So we went from 575 pips this morning to now, if we were to close everything out, we should be up. Not everybody's going to be exactly the same, but approximately everybody should be around 758 pips of profit, which is really exciting. And I just want to highlight one thing. I'm sure we're going to talk with Ben about this concept. This is one of the observations he made, is the concept of being patient and holding, right? So think about that. Like, have you, like yesterday we were up quite a bit, and then just overnight the trades improved drastically to, we were up 575 pips. Now we are up 758 pips just by holding. So an extra, we'll say 200 pips ish. We're up 190, 180 pips just by holding another 9 hours, right? So I think it really goes to show the concept of having patience. A lot of times it's really easy for us to see these types of profits come in, and all of a sudden it's like, oh, I got to close this. I got to take this profit because, I haven't seen profits in a while, so I got to take this, right? And I shared this morning one thing that I do to kind of fend off or kind of satisfy my natural craving, which is to take those profits, right? Every single one of us wants to take those profits when they come in. And so one of the things I do is, as long as for me, as long as my trailing stop is in, I'm okay, right? Like obviously I'd like to, every single one of us would like to book as much profit as we humanly possibly could, right? But that's not always going to happen. It almost, well, it never is going to happen, right? So the trailing stop for me is that satisfaction of knowing, hey, let's let this thing go, and as it continues to go, I'm locking in more of that as it continues to go up. But when it finally pulls back, we might give up a little bit of that cream at the very, very top, but at least we made all of this in between, right? That's kind of the idea with the trailing stop. So I just think it's interesting. Again, had you closed these trades last night, you really would have sold yourself short on a really good week. And it is important to have really, really good weeks with the COT report, because there will be bad weeks. And there will be weeks where you're going to be like, why did I take these trades? This is terrible, right? That's going to happen. Mark my words. If it hasn't happened to you yet, it will happen, which is why we need to have some really, really big, fantastic, phenomenal, just outstanding weeks where that money comes in. All right. So anyway, I talked about that. We'll talk about that more later. What I want to do is, for those that are watching the recording or who are new to the COT report, I do want to make sure that we cover how this strategy basically works and where it came from. So let's jump into that. And again, please stop me if you have questions. Just type those questions in the chat box and I can answer those as we go along. So about 4 or 5 years ago, I ran into the COT report when I was working for another trading company. Not because that company was trading with the COT report. It was actually just through my own research. I just hopped on YouTube one day, and I was just searching, Forex trading strategies, just like everybody else does. And I found this guy that was trading the COT report, or at least using the COT report as another set of confirmation for the trades that he was taking. And I got really interested into it because it was a way to navigate what the institutions were doing, and it didn't cost any money. It was free information, right? So if you go to cftc.gov, this is where you find the COT report, and it stands for Commitment of Traders. And when you're here, this is what their homepage looks like. And there's obviously a lot of different things you could go down, rabbit holes you could go down, but specifically we're going to look at this one that says Commitment of Traders. It's found under the Market Data and Economic Analysis tab, right, or ribbon up here. So now we're going to click on this. It'll take us here. And then there's going to be a lot of different COT reports that you can look at. The one that we really focused on is this one, which is called the Current Traders in Financial Futures Report. So we're technically looking at a report that's in the futures market, even though we don't necessarily trade futures, the contracts that we're viewing are very much applicable to Forex trades and can be used to profit in the Forex market, right? So if I click on this and click long format, it's going to pull up this very boring report. This is a COT report, and this is the COT report we use every week. And when you click on that link every week, it will pull up the most up-to-date or updated COT report. Just so everybody knows, the government releases this report every Friday at 4 p.m. Eastern time. So if you want to mark that on your calendar, you can do that. Now, this COT report comes out on Fridays. However, they collect the data from the Chicago Mercantile Exchange and other exchanges on Tuesday. Now that may sound like a delay, and it is a delay. It's unfortunate. It's an unfortunate delay, and sometimes I wish they could get their act together and report this a little bit faster, but that's what we have to deal with. So it is a little bit of a delayed, what I guess you could call it a delayed indicator. However, a lot of the times when the banks build positions, it's not one of those things where it's like, oh, we're building a position today or next week or next month. Sometimes these banks will build positions over several weeks at a time, sometimes several months at a time. And so just because this is a few days delayed doesn't mean it's information that couldn't be used. It's definitely very, very useful information, and we've proven it to be very useful. So I like to zoom into it, and I just do a Control Plus because it's really hard to see with your eyes unless you zoom in. So I like to do that, and then I just do a Control F to navigate where I want to go. So if I wanted to look at the Australian dollar, I just search AUD, and that's going to take me to the Australian dollar. And when I'm here, you'll see that there's different participants on the COT report. You've got the dealer side, asset manager side, and the leveraged fund side. So this was actually a battle for even just a year or two. I was trying to figure out who's the best, or what would be the best participant to be looking at, because when they publish this report, there's different types of traders out there. There's traders who are hedge funds. There's traders who are dealers, commercial traders. You have non-commercial traders, asset managers. These are people who manage funds for a lot of school districts and pension plans, things like that, right? Asset managers. And then there's leveraged funds. Leveraged funds, from what I've discovered and through my research and through the people I've had conversations with, is probably the best place to be if you're a Forex trader. Because if you look up the details and the description of a leveraged funds trader, these are people who take what are called outright positions. It's an actual financial term in the COT report. And they take these outright positions with the intention of making a profit. So they're trying to basically speculate where the market's going to go. And their sole purpose is to make money, nothing else. They're not trying to hedge the market or use the Forex market or futures market as a derivative to hedge their other assets, to hedge like an asset manager might hedge with the currency market or futures market against maybe some other assets that they hold in their portfolio, nothing like that. So leveraged funds are just traders who are specifically just out there they're the wolves, right? They don't care where the market goes. They literally don't care. All they care about is just making money, which is us, right? That's what we want to do. We want to make money, right? So these guys are pretty dang good. As you know from this week, they're pretty dang good. They're really accurate with the trades that they take. Not every week they're going to be accurate, and some weeks they're going to be, switching directions. So I do want to make clear that, sometimes we're not going to get it right, because then it's not like they're not God, right? But they are pretty good at what they do, and they've been doing it a long time. So we might as well follow the people who are pretty good at it, right? So basically what I look at when I'm looking at leveraged funds is I want to see the amount of long positions they have, and I want to look at the amount of short positions they have. I also want to look at the change in positions from week to week. So basically what I do on the weekend is I grab this information, right, from the long side and the short side and the change, and then I plug it into my journal, which is right here. Okay. And I put in the long positions, the short positions, and I also put in the change right here. The rest of these numbers, so these numbers right here that you see, these are just derivatives of whatever I inserted right here. So what I want to know when I put it in this journal is I want to see what's the percent long, what's the percent short. So of all the positions on the Aussie, what percent is long and what percent is short, right? That kind of information is really important to me. Same thing with when I'm looking at the change. I'm really curious to know from the previous week, how much do they add long or how much do they add short? This can be very helpful in determining which direction to go. So like if you look at the franc, you can see that there was a pretty substantial net change from the previous week, 14% net change. You can see the euro actually had a net change long, and they already are long, which is great. You can see let's see, what else do we have here? The CAD went short, minus almost 7% short. And in addition to that, they already were trending short, right? Because this is what their current holdings are. And they were basically heading the short direction. So this week, I would say you had pretty substantial signals because a lot of stuff, just the stars aligned, right? Like everything just kind of came together. Now, the way I trade this and the way I've been trading this the longest, because I've traded different versions of the COT report. In fact, if you were to talk to me maybe a couple years ago, I used to only trade non-commercial, which is another subset of participants. I didn't trade leveraged funds. In fact, it wasn't until about probably a year ago where a friend of mine who trades the COT report said, dude, you gotta trade leveraged funds. That's where the real speculators are trading, and that's where you're going to get the most accurate week to week signals. And so I did, and yeah, it definitely had better results. So that's why I kind of went the leveraged funds way. Anyway, that's a whole nother story. We can talk about that another time. So okay, so anyway, so what I do is I take, for those that are new, for a lot of you, this is old hat, so I'm kind of going quickly. But what I do is I analyze this information and I want to find the strongest currency of current holdings, right? So I want to find who's the most bought currency, or the top 2 or 3 most bought currencies, and the top 2 or 3 sold currencies. And I've highlighted those in green and red here. And then what we do is I take the top bought currency and I'm going to pin that top bought currency against the weakest currency. So for example, this week, the franc against the Japanese yen was the best combination. So you had the most bought franc against the most sold yen. So the best option would have been the franc yen. And then all these other ones followed. So you had the CAD, which was pretty short, against the franc. That was going to be a short position. Because the base currency is the CAD, and so you want to short that base currency, which is why we went short on that pair. Look, Euro Yen, I think, has been perhaps the best trade of the week you could possibly have traded. I actually just got off the phone with a trader a few hours ago who, before they knew about the COT report, they were shorting the Euro Yen all week just because that's what they thought, they thought it was going to go down. They just thought it was, because they thought it was too high. And that's what's so cool about the COT report, is a lot of times it can keep you, if you're not going to use it, at least it could keep you out of some really bad trades. I think you should use it just because it can produce a profit, obviously. So anyway, really cool. Euro Yen, obviously another really good combination. So all of these are combinations of these highlighted currencies over here. That's all this is. And then the top 6 is what you're going to trade all week. So what I do is I just basically take the top 6 trades and I just hold them all week, right? You're just going to take these top 6 and then just, and then you're going to plug in a stop loss. Typically that's just going to be a, not a half, a full daily range stop loss, which we go get that from Maytaf, which is another thing we can talk about another time if you're new to the program. And then you just plug in your trailing stop, which, by the way, for those of you that are struggling with trailing stops, we did a basic training webinar on, let's see, in fact, let's go take a look at this. So we did a basic training webinar. Let me log in again. Actually, maybe, am I logged in right here? Yeah, I am. We did a basic training webinar on Monday. Let me pull it up here just a second. Yeah, if you look at Monday, we did a basic training, the weekly training. We did a full class on trailing stops. So if you haven't seen it yet and you need help with trailing stops, on how to set them up either on MT4 or how to set them up on TradingView, this would be a good class to go back and watch. Okay. So definitely go check that out if you are new or need some extra help with the trailing stops. So, okay, so here's what I want to do now. So I've kind of explained the strategy in a nutshell. If you do have questions, let me know, and you can put those questions in the chat box as we go along. But I would like to give some time to Ben. To what he's going to do is he's going to pull up his journal, and we're going to comment on it. He's going to spend some time explaining what he did in his research. I even have some questions for him that I was going to ask. If you guys have questions for him, feel free to put those questions in the chat box. We're just going to unmic him and myself, and that's it. So if you have questions for him, just put those questions in the chat box. And again, let me just give you a little introduction with Ben. So he's actually a cousin of mine. He's also a client and a member of our program. He's been trading since about, I think, October. And in fact, let me go ahead and unmic him real quick. So let me know if that doesn't work, Ben, in the chat box, but I'm going to go ahead and unmic you and get you ready. But he's been, and actually, let me make you a host as well while I'm at it. Okay. And then let's see, does that let me? Okay, cool. Yep, awesome. So yeah, like I said, Ben's been with us since I think October. Is that right, Ben?
Yeah, about October.
Cool. Yeah, and you kind of started off trading supply demand concepts, kind of got your feet wet with that, but you didn't have any experience trading before, right?
Barely
Yeah.
anything. Before probably September, I literally had no experience. So
Cool. But I remember you talking to me, you were looking into a lot, just like basic financial education videos, investing videos, and you saw some of the things that we were doing and you got interested in it. And it's been kind of you've been everywhere, right? I remember your journey. You've been telling me your journey. You've been looking at different stuff and you've been trying out different things. So what kind of drew you to the COT report specifically and kind of the trainings that we're doing?
yeah, so I guess really kind of just mentioning what Steve was saying. I just wanted, I think every trader has to have their own journey, has to go through their own journey, learning a lot of things and failing a lot. I think we were talking about the other day, a trader needs to fail a lot to learn a lot and to become a better trader. If you can't learn how to fail a lot, then you probably, if you might not be ready to do a challenge. You might not be ready to use real money if you're not willing to lose, even a couple weeks in a row. And so I was doing supply and demand. I was doing price action. I was trying Fibonacci. I was trying everything possible, and none of it was really working long term. Really, my goal for trading was to make it more of a passive thing and not make it beyond me being on the charts 8 hours a day. That was something that I never really wanted. I've always kind of seen finance as more of a long-term thing, and I wanted to keep everything long-term and more of like a passive thing instead of active. And so when I started looking back at the COT report in October, it's kind of funny how you have to go full circle sometimes to finally realize that you were being dumb during that whole full circle, but it's okay. I think everyone has to deal with that sometimes. but I finally came back full circle and I was like, wait, this just makes sense. And so I did a lot of research and I just went super deep into it. And I'm actually now, it's funny how you mentioned that I went back into May. I'm actually now wanting to go back into 2020 to see how even more long term this works out, just to give the COT report even more viability and be like, hey, like, this works for not just 6 months, a year, this works for like 3 years. Granted, I'm not going to do that overnight. It's going to take me a while, because I don't know if you guys have all done back testing, but because it's not fun. It's not a fun thing to do. It's not like something you do when you have free time or anything. So,
Right.
but that is what I'm anticipating to do with the COT report.
That's awesome. No, that's awesome. I appreciate you coming on. Yeah, I feel like back testing, the COT report is one of the more difficult back testings, because it's you'd have to manually input all of that information. And I feel like it'd almost be faster to figure out how to program, like pulling that data out with a program or a system like that, which I have yet to figure out how to do. So, but that's awesome. Great endeavor. So tell us a little bit about your findings. So you did a back test into the summer of last year. So we're in summer of 2023. And you saw some interesting things about the summer of last year. I was just hoping you could make a few observations about, and you and I did talk about this just the other day. And I was hoping that you could make just a few observations of what you found.
Yeah. Just want to make sure, can you see, is it the COT report that everyone sees right now? I have multiple screens, so I just want to make sure.
I can see your screen. Yes. Can everybody else see it? Just give us a, okay. Looks like we're good, Ben. Yep.
Okay,
Cool.
So as Steve has kind of already shown, we went all the way back until, I think, what did you like, the first week of October, I think was the furthest. You might have gone into September a little bit.
That's
I
correct.
think
Yep.
you kind of got into this area right here. And I saw this right here and I was like, okay, this is really interesting. I want to see, I'm a numbers guy. I'm not an emotional thinker. I'm a logical thinker. I use my brain more than my heart, definitely. And so I wanted to say, okay, well, if I risked 1%, what could I anticipate to make on a weekly basis on average in the long term? And so as you can see right here, you see a 1% risk and then a 0.75%. So this is just if you're risking 1% per trade and if you're risking 0.75% per trade. So I calculated it all the way up to October 4th, I think, originally. And I saw it was, I think the 1% risk was like 1.5 something, a little bit over 1.5. And then if you're risking 0.75%, it was a little bit, I think it was like 1.15, 1.2%, a little bit higher. And so I was like, okay, well, knowing myself, I wanted to go deeper into it. And so what I did was I just started back testing and I kept going and I kept going and I kept going and going all the way until May 3rd of 2022. The rest of this right here is something I want to do in the future, but right now, not yet. I'm not feeling it yet.
You need to get a rest in between, right?
Exactly. And
Awesome.
so I just wanted to let you guys know these are the only accurate numbers right now. The net profit, gross loss. These right here, don't worry about these. This is also includes all the way back into 2020. I have this function that shows how many weeks it counts on the A column side. So don't worry, it's not only 119 pips a week and it's not 38% win rate. I just want full disclaimer. It's really around 50%, and the pips I forgot, but it's definitely higher than 119. So I think I've only back tested like 35 weeks. And so just, take this with a grain of salt. It doesn't mean it. And so what I did was I kind of was just looking at how it went throughout each season of the year, kind of seeing how things were going. And of course, through Steve's back testing, you saw that December was frankly a pretty crappy month. And a lot of traders, as I think some of you guys know, a lot of traders avoid December just because The markets are a little weird. Everyone's just trying to close out everything before Christmas and New Year's and everything so they can just have fun with their families. And so the markets really are all out of whack. And so if you see here, you had negative, 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 negative. So you would have had a pretty bad December before you go into the holidays. So I was like, okay, well, is there any other times of the year that might be something that I can prepare for mentally? Granted, there are anomalies out there. There are just some months that you just happen to have bad months and you have no control over that. But I wanted to see if there was anything else that might help me. And I started seeing that everything was actually going pretty well. September was fine. You had some killer months, right? You had a killer week right here, 7% if you're risking 1%, or 5.25 if you're only risking 0.75%, which is an amazing risk to reward ratio. And then you kind of start hitting the summer down here. Let's see, in July and June were kind of off months. And I'm saying that not in a horrible way, because it really wasn't that bad. Like you see, you're barely losing anything here. You're barely losing anything here. Even here, they're not bad months, but you're not winning a lot.
Just slow weeks, right?
They're just very slow weeks.
Yeah.
For some reason, again, I'm just mentioning it could just be an anomaly, which is why I want to go into 2021 summer and see if the summer of 2021 was also bad. Because then maybe you could have some validity there saying, okay, summers anticipate that it might be a little slow, but it usually picks back up in August or September, right? And so I think I remember we calculated it the other day, Steve, and I think it was, you would have lost a little bit over the summer, but really not that much. But we were also mentioning that, look right here in May 31st, you would have had one of the best weeks ever right here. You would have almost made 10%.
In 1 week.
In 1 week, that would have been phase one already done. And then if you only risk 0.75%, which is what I'm currently doing right now, just because I want to make this more of a long-term thing, and I don't want to lose any account. I don't want to lose any of my funded accounts, anything. So I'm risking little to nothing so I can maintain those accounts in the long term. And even with that, you're still making 7%, which is an amazing week.
Yeah.
And so definitely. What we were kind of discussing the other day, and I think you guys can see it too, the summer might have been bad a little bit. Let's say, the summer was subpar. The summer wouldn't have been as good as you hoped. But if you missed out on this 1 week right here, you'd be really kicking yourself. At least I would be kicking myself. Yeah. If you just traded this week right here, and then you would have had a crappier month, you still would have come out the whole crappy summer, if you want to call it. You would have come out very profitable. I think we came out at like 5%, 6% or something like that, which is amazing.
Right.
That's still really fun.
Oh yeah. I think we cherry picked, if you were to have started the COT report on June 7th of last year and traded until, I think it was like mid-August, you would have been sorely disappointed. Like you would have been down, 5 or 10% or something like that. But had you picked up the May month, had you taken all the trades in May and then traded to August, you would have made about 10% total. So it's quite the difference, right?
Because look at all these great weeks right here. Granted, you have -1, -1 right here, but then you had almost 4, and almost 10. So what this really shows, at least up to this point, we have, over a year's worth of back testing. It shows in the long term, as you see right here. And these numbers, you guys can all test. I think I told Steve to correct me if I did these wrong, but it's really just, I just did the Excel formula, just, the whole column. And this is what it shows right here. So if you're only risking 0.75% a week, you're going to average 1.1% a week, and then almost 1.5%. So let's say you have $100,000 trading account or whatever, you're going to risk, $1,000 per trade, and you're going to come out each week almost, 1.5K a week. Granted, you can't assume that's going to be every single week, of course, but averaging out, if you should think about this as more of a business than just like a little side gig to make me money real quick. If you see this more as a business, that's a very good business to be in. That's profitable.
Yeah.
And as you see here, it is a profitable business to be in. As long as you keep your head on straight and you're not doing something stupid, as long as you're using, a risk calculator, this is just an example. As long as you're calculating it correctly, making sure what I do before I put in the trades every single week, I recalculate. I press the calculate button like multiple times just to make sure that it really is 0.38 lots. I'm not going to screw myself over just over a stupid position size calculator. I'm going to screw myself over by doing something stupid, something else stupid.
Right.
So I would say just really make sure that you guys have your head on straight. Granted, I don't know if I have too much authority talking, because granted, I have only been doing this since October, but I can tell you that I have learned a lot, and I've probably failed more these last 10 months being a conservative trader, not being stupid, like risking 5%, but just being a conservative trader, trying to learn things. I've still failed so many times. And I think really you just have to just trust the process. And this is really this is probably the only strategy, at least I've seen and learned about. This is the only strategy that has actually proven to be viable long term, and it goes along with my vision of trading. I just go in Sunday night, I put in my trades, I make sure my position calculator is ready, double, triple, quadruple calculate just to make sure everything is good, and then I just let it go. Granted, I did see some people were saying, I was just seeing in Steve's story that some people were closing out this week already, and that's totally fine. If that's according to your trading plan, that's fine. I think everyone should have a trading plan and a strategy. For some people, if you're not comfortable keeping all your trades open for that long, like after this amazing week, I know, I bet Steve would agree with me, take half your profits or a quarter of your profits, just take some of it out just to make sure that, just to maybe help yourself a little bit and be like, hey, like, I'm protecting my capital first, and then I'm making money second.
Right.
If you really feel like you need to take a little bit because you've noticed in the past that things go up a lot and then it kind of comes down, just help yourself out a little bit and take a little bit of the profits. You don't have to take all of it out. I usually don't, but that's my trading plan.
Yeah.
You guys can do what you want. It's your business, your life, your trading rules. That's something that Steve and I or anyone else can't force you to do. Of course, Steve can say, hey, use a lot size calculator. I think that's something that you really should use, but I think anything else, most of the things that you should use at the COT report in regards to profits, and when you take your profits, when you check your stop, where your trades are, where you want to trade your stop loss, that's, if you want to do the full trailing stop loss, do half of the trading stop loss, whatever you want to do, that's up to you.
That's awesome. Yeah, and I really liked one thing that you said in particular is following the plan and holding these trades out to fruition. Like you were saying, if you close those trades early, still it was a good week, but look at all the profits you would have missed out on, right? And sometimes you need some of those profits to kind of stay with the efficacy behind the strategy. In fact, something that you and I commented about the other day is something we learned in our finance classes. I remember my professor one time said, if you were to just remove the top 5 trading days of the year in the stock market, it would totally spoil the whole idea of investing in the stock market. So basically, if you have a 401k and if you removed the top 5 days of gains in your portfolio, it wouldn't be worth investing in the stock market anymore. And we don't know what days those are going to be. It's the same thing with the COT report, right? We don't know what week is going to be just absolutely ballpark phenomenal. We just have to continue to we have to keep throwing our darts into the system and say, okay, let's try it this week, try it this week. And we just keep going until obviously we hit a big week, and that kind of smooths out the average. So that's awesome. Ben, real quickly, Wesley asked a question here. He says, do you use a trailing stop while back? So when you did this back testing, did you use a trailing stop?
I did. That was actually probably one of the more boring parts. I had to use the ruler. Let me try to share my screen for the trading view, just to kind of show what I was having to do. this part wasn't super fun. Well, I don't know if back testing is fun anyway, but for some people love, I know a couple of people who love doing it, and good for them. If you can do it for me, I love that. But so let's just use, I guess I have the Aussie Kiwi on here. We are not trading that this week, but let's say, for example, you had a trailing stop loss, and yes, I do use a trailing stop loss. I guess let's say that first. And what I did do was, let's say you put in like at 5 o'clock on Sunday right here. Let's say like right at the close of the candle right here. What I would do was, let's say you had a 60 pip trailing stop loss on the Aussie Kiwi. So what I did was I calculated how much that, and I went to the wick. I tried to figure out what was the highest that price got at one point. So it was 46.4. So what I do is I would go into a calculator. I would usually just do it on my phone because I would be able to use it on there. What I would do is I would put 46.4 in, and I'd subtract it by 55, because I think that was what I was saying, right? So that's because as you can tell here, the movement here, it went just down, right? It was going to go down anyway, and you were going to lose out on your money. So what I did was, if you had a 55 pip stop loss and it got up to 46.4 pips, I put in the COT report, I lost 8.6 pips during this trade. And I did that for every single pair that I had on the back testing. And so, of course, if I was actually shorting this pair, then I would have gone here. I would have started right. Well, I would have totally lost all my money. No, never mind. It would have come back. So, I would have almost stopped out, but I would have came all the way back. And so what I would do was I would go here. I'd find out how far it went down. So it went down to 70, about like 70 pips on the dot. And it finally comes back to break even. So I am assuming that, you've already hit your trailing stop, right? So you just do 70 minus 55. And so you would have had a 15 pip profit, probably somewhere around here. So that's what I did for the back testing.
Man, that must have taken you a long time. So
yeah, it took more than 30 minutes.
Oh yeah, I think you said you a total of 2 weeks you said you spent back testing each one. Is that right? Wow.
Yeah. Granted, I wasn't doing it 8 hours a day, so I don't want you guys to think I
Right.
was doing this for 8 hours. I was probably doing it in 30-minute increments 4 times a day. So,
Wow.
But yeah.
Let's answer a few more questions here. I missed Sandy's first question. Says, a long time ago I heard that some pairs are seasonal. Is there any correlation to the pairs traded during the summer? I'll answer this one, Ben. So basically, yes, seasonality is a thing, Sandy. In fact, I used to subscribe to a service. I think it's just called seasonalforex.com or something like that. And basically they built these charts that would show how the Aussie performed throughout the year. When did the Aussie have the highest up times, or when did the pound have its lowest lows, and so on throughout the year. So seasonality is a thing. However, these banks and these leveraged funds, they do take into effect those things for us. They already do that work for us. So we're just responding to what leveraged funds already does. And then lastly, I was going to say, some years, not every pair is going to be seasonal either. It just kind of depends. I think fundamentals would matter more than seasonality. But yes, if there's not a lot of stuff going on in the economic climate, then yes, expect seasonality to take precedence over any macroeconomic variables. But yeah, great question. Roger says, my plan is in writing. Excellent. Everybody should do that. Fantastic work, Roger. And then maybe, Ben, you could answer this question. Sandy says, did you also note the average loss?
No. That is a very good question. Maybe I should do that. Okay. Yeah, I could put another column in here.
Yeah, I think that would be good to know. I think why Sandy's asking that is just because we'd like to know, and this is something I could do with even my own statistics. I'm sure we could figure this out. Maybe I'll work on it on my own journal, is basically if I were doing a prop firm challenge, I would want to know, okay, how big is this loss actually going to get? I mean, obviously, if we're using a lot size calculator, there's a maximum amount you could lose in a week, right? If you're risking 1% per trade and there's 6 total trades you're taking, then yeah, the very worst thing that could happen is you lose 6%. But it's just, how often or how much am I going to lose 6%? Like if you have multiple weeks where you lose, how big is that loss going to get? Last question, Ben, and I wanted to, and if you have anything else to share, that'd be great. But I wanted to ask you, so what is your opinion on like what type of prop firm challenge? You shared with me, you indicated that you're doing a prop firm challenge right now. What type of challenge do you think somebody, a trader should subscribe to pass in the most conservative way possible? And then I guess lastly, second question with that is, what are you doing? What's the type of prop firm challenge you're doing that you feel like is most aligned with how the COT report performs?
So I guess to answer your first question, currently right now I am doing a prop firm challenge and I'm doing it with Funded Trading Plus. And that's not because Steve said it. I've actually been wanting to do Funded Trading Plus for a while. I am a more conservative trader in the fact that I kind of ingrained itself in myself in my brain that I need to protect my capital first and then make money. And so currently right now, I'm not risking 1% on each trade just because I'm doing this. This is for the long haul. I want to make sure I do this for years and years and years. And I'd like to accumulate multiple, accumulate multiple accounts and never have to worry about losing any of them because of a big, horrible week in the COT report. And so I'm only risking 0.75%. And I think it was Sandy who was saying that what the average loss is. I'm actually really interested now because I'd like to see what my average loss would be risking 0.75% to know, on top of a winning week, what can I expect to lose on an average week?
Yeah.
Because that would be very nice to know. If I have a really bad week, I would say, okay, well, this is an average week, it's fine. Or this was actually not that bad. I might have another week like this next week if, just according to the average loss. And so what I am doing is, like I said, I'm doing 0.75%. It's probably going to take me a minute as the COT report, my COT report says, I'm going to make about 1.1% a week unless we have just an amazing month. Then I might, because, this week has been great. So sure, I'm up quite a bit already, but I'm not getting, and I think this is another part that I've heard Steve talk about many times. Like you can't get too, and I'm going to say this in the nicest way possible, I guess. You can't get too excited when you have a lot of money in your account, because that money can be gone. You have to separate yourself from the numbers. And granted, I've only been doing this for, a little under a year, but I've accustomed myself to looking at it as just numbers, and I don't freak out when I'm up $3,000, or I don't freak out when I'm under, let's say I'm negative 4,000 or 2,000. I don't freak out anymore because I see it as, it's okay. This has happened. I've actually had worse. So this is actually not that bad. Negative 1,000 is actually great compared to negative 8,000 or something. So you really just have to separate yourself from the numbers. And so that's what I'm doing is, this week has been a great week, but I'm seeing this as an above average week. So I'm, it's going to be a very, hopefully, things go well the rest of this week. I may be able to close everything out Friday morning with a smile on my face, but then I'm going to forget about it as soon as I can, so I can get ready for next week. Cause every week is different. As you saw in the COT report that I started, you don't have 6-7 straight weeks in a row that you win, but you also don't have 7 straight weeks in a row that you lose, at least up to this point that I found. So you kind of have to just roll with the punches and just trust in the process and know that everything's going to be fine in the long term.
That's awesome. Well, appreciate it, Ben. And that's very wise advice. And I'm sure I'm speaking for everybody else here that we really appreciate the work that you put in and being willing to share on the spot there, the work that you did. And again, wow, just great work. That must have taken a long time. So yeah, thanks, Ben. I think I'll go ahead and take over
Yeah,
again. But yeah, good luck with your challenge. I'm sure
thank
you'll
you.
do fantastic. And it sounds like you've got a real plan put in place. So that's exactly what we want everybody to do. And it sounds like you're on the way there. Also fun to talk to another subscriber in the program. So appreciate you, Ben. Awesome. Okay, cool. Let me go ahead and share my screen again. Cool. And let me see if there's any other questions that I have missed here. Okay, cool. Oh yeah, Roger. So FTP, so Funded Trading Plus, they have a 3% daily drawdown on their, they have 3 different programs. They have instant funding, they have a 2-phase challenge, and then I think you're talking about the 3% daily drawdown. That's for their program that's single phase. So you'll find with a lot of single phase challenges that a lot of single phase challenges, they give you that really tight drawdown, max drawdown. With their 2-phase challenge, they actually give you a 5% daily drawdown. And it's, you still have to make the 10% return, but they give you unlimited time to do it. So you have unlimited time, max 5% daily drawdown, 10% total drawdown. And that's for phase 1 and phase 2. Phase 2, is still unlimited time, and you still get to keep that 5% max daily drawdown. The only thing you can't do that I think is unique or a little bit more unique to Funded Trading Plus is you can't hold over the weekend, which is fine because we close our trades on Friday before lunch anyway, or around lunch anyway, so should be fine. They allow news trading, which is new to them. No. They've always allowed news trading. That's a different one. So they've always allowed news trading. So I actually think, and it's just my opinion, and I don't want to, here, let me jump over here. I don't want to necessarily recommend a prop firm, but I personally feel like the COT report, if you're willing to do a kind of a, maybe if you're willing to not necessarily pass in a month, like a lot of these prop forms kind of conform you to pass in a single month, I think maybe Funded Trading Plus might be a better prop firm if you're willing to just kind of do what Ben was doing, like risk a 0.5% or 0.75% per trade, so the risk is a lot less. Maybe instead of having those weeks like this week where you make 7% in a week, I would postulate, Ben, you can tell us in the chat box if I'm wrong, but I bet you Ben's probably up like 4 or 5%. So not as much as everybody else who's up, 7, 8% on the week. But I think the idea with Ben is to be slow and steady with Funded Trading Plus, but you're almost guaranteed to pass if you do it that way. You're not going to fail the challenge if you keep the risk pretty low like that. Yeah. Okay. So yeah, he's up 4 or 5%, which is great, but it's not like he's risking 1% per trade. So he wouldn't pass if it were FTMO where they're requiring you to make that 10% in a month. If Ben has a good month, he might make 5%, 6%. And then if it takes him 60 days or 90 days to pass, then so be it. He's just kind of going the slow and steady route. And sometimes I think that might be the best way to go for a lot of traders. Plus, it will help you develop a lot of discipline and patience with the strategy if you're willing to be kind of slow and steady. So, all right, guys. Well, let's see. Any other questions about what we talked about today? I think today was very refreshing. It was super awesome to have Ben on and be able to talk about the strategy. And I don't have any plans with my trades. Obviously, the trading plan is to hold until Friday. So even though there might be a few news events coming out, there's really no reason to close. We did fine during FOMC today. Obviously, FOMC kept rates the same as expected, and that really didn't affect us because we didn't even have any dollar pairs to begin with. So I'm just kind of holding, and we'll let our trades go until obviously tomorrow and Friday. And then we'll just look for some more trade setups in the morning if we can find some more. So All right, guys. Well, I appreciate your attention today, and I appreciate you guys. Have a fantastic evening, and we'll see you guys in the next webinar.